Hi traders, you are welcome to my video on the volume spread analysis. Have you ever wondered how to predict the market's next move with more precision? Imagine being able to forecast the next candle and anticipate price action before it happens. Well, you are in luck because in this video, the volume spread analysis is what we're looking at, and it can give you some insight. Okay, it's not a magic wand or some you know supernatural stuff, right? It's an effective indicator, but it is not foolproof. Okay, so just set your expectations right. Okay, in as much as this indicator is effective, it does not guarantee profit. Okay, I just have to give that disclaimer before we proceed. Now, if you're ready to level up your trading, hit that like button, subscribe to the channel, and make sure you don't miss any of my upcoming trading courses. Okay, before we jump into predicting the next candle, let us break down what the VSA is and how it works. All right. The volume spread analysis, or VSA for short, is a technique that is used to understand how the market moves based on the relationship between price action and volume. All right. So volume is one of the most important factors when predicting market direction, and the VSA helps you interpret whether institutions are buying or selling based on volume spikes and price movement. So basically, it's all about reading between the lines of price and volume data. Okay. Now let's just consider some key concepts in VSA. One is volume spikes. Okay, let's just zoom in a bit. You can see that zoom out. Sorry, you can see that this is an indicator that is representing VSA. Okay, now VSA is a concept in its own right, but then this is actually a VSA indicator. All right, as you can see right here, the volume spread analysis. Yeah. So now considering some key concepts of VSA, one is volume spikes. When you have a significant increase in volume, as you can see when the volume rises to the top, you can see reaching all these high points. It often signals strong market activity. Whenever you notice spikes in volumes, it signals strong market activity and a possible move in price. Okay, now talking about price action, understanding how price moves in relation to volume helps predict future movements. Okay, you will notice that when we are in an uptrend, in fact, we can see where we have been in an uptrend for a while. You will notice that it was mostly yellow spikes. It was mostly yellow spikes. Okay, yellow, then you're going to see some green background, right? Or rather, some green bases, some green colors at the base, but mostly yellow spikes because of the bullish direction. Now let us zoom. Let us go back a bit. Let's go back. Let's go back. Let's go back. Let's go back. Okay, so that we can look at the other side. Right. Okay, let's go to higher time frame so we can be able to go further backwards. Be able to go further backwards. Yeah. Okay. All right. Let's just switch to another currency. Let's see. Switch to another currency pair. I want to look for, you know, I want to look for a pair where we had a lot of red spikes, because we can see that the red spikes were not exactly that much. Now, There is something I'm beginning to understand with this the spikes. The red probably indicates um, a decline in volume, if I'm not mistaken. It seems to represent a decline in volume because we can see that this is literally a blue candle, a green candle. This is a bullish candle where we had a red spike. So it doesn't make sense that you are having an increase in sell volume, but it's resulting in a bullish candle. It doesn't add up, right? So what I'm thinking is there is likelihood that this indicator tells you when there is an increase in volume and when there is a decrease in volume. I think there was a spike in the decrease. If I'm correct, okay, if you know this indicator more than me, you can just tell me what it means in the comment section. Yeah. So just know that no one has a monopoly of knowledge. Yeah. It's important that you have that at the back of your mind. No one has a monopoly of knowledge. So I paused a bit. I paused a bit because I got confused at some point. I was looking at the indicator and I was trying to understand why we were having mostly yellow spikes, because initially it felt like the majority of the yellow spikes was because it was dominantly a bullish trend. But then I realized that it's not just only about the bullish trend. Even when we had a bearish trend, can you see? Even when we had a bearish trend, we still have the yellow spikes dominating. So it feels like the yellow spikes are indicating increase in volume. Whether it's a bearish volume or a bullish volume, it doesn't matter. The volume indicator is telling you that there was an increase in volume. So if it is a bearish trend, then it means that the increase in volume was bearish volume. If it was a bullish trend, it means that the increase in volume was bullish volume, right? So the red spikes are likely volume decreases. I stand to be corrected though, but it seems like volume decreases. Okay. I wish the indicator gave an option. That is the reason why I came to the settings. You see, one of the things with indicators is that if at some point you get confused as to the functionality of the indicator, try looking at the settings of that indicator. Checking if there was perhaps any mention of a particular representation, what it means, right? But I couldn't exactly find the specific explanation as to what the word meant, or what the had it been they had said something like maybe something mentioned like sell spike, or maybe buy spike, or whatever. But it's not like it happens all the time. Yeah, it's not all indicators that give you some extra details that can guide you as to the functionality of the indicator. But basically, this indicator, as we can see, it shows spikes in volume, right? That one is already a noted fact. It's a noted fact that it shows spike in volume. But upon detailed analysis, as we can see, upon detailed analysis, in this video, we are just trying to analyze the volume spread analysis. We are trying to look at the volume spread analysis. So let's just get on this journey together, okay? We are trying to analyze something here. So in addition to the concept, I told you that the volume spread analysis is a concept on its own, right? Then now this is an indicator that tries to represent it, okay? So now based on what we can see from this indicator, it seems like the yellow spike is telling you about increase in volumes, right? Increase in volume. And what I can observe is that these green histograms at the bottom, it seems like they were mostly areas of small volumes, because if you look closely, you will see that wherever we had the green the green volume histograms, the candles were mostly small. They were mostly small. If you look closely, you'll see that where we had the green spikes, the candles were mostly small. It seems like they are mostly periods of consolidation. Just compare the green spikes, compare the green spikes to the yellow. I mean the ones that were actually long, the yellow spikes that were actually long. If you compare it, you're going to see the difference. And probably that is the reason why you will see that we are most likely not having green spikes. because those green bars are mostly periods of consolidation, while the yellow spikes are seeming to be increase in volume, while the red spikes are seeming to be decrease in volume, based on what I can observe. Yeah. So when you want to use this indicator, if you are a type of person that likes to include volume into your analysis, combining volume and price action, just pay attention to the spikes. Most importantly, okay, when the bars are below this blue line, when the bars are below the blue line, you can ignore the market activity around there, right? Because they are mostly just low volume. They're mostly just low volume. But when you notice a spike climbing as high as the midpoint of the indicator window, then that is something significant. There is something significant. Can you see that at this point where we had a spike, in the red spike? Can you see that there was if there not just a gap, there was actually just after the gap. Sorry, the red spike happened after the gap. Can you see that we actually had a reversal in the initial move? So while the initial volume favored the downward direction, it happens that after that downward move, the red spike came up and caused a reversal. Now, when we had a yellow spike here, it was in line with the overall trend. The yellow spike was in line with the overall trend, which was a bearish move. The red spike was against the overall trend. Here again, we had a red spike, which was against the overall trend. So are you getting the point now? Based on what I can observe, the red spike was against the overall trend. Let's see. After, that these histogram bars, they just come, how do I put it? They are very close to each other. But if you carry your mouse and hover, above this, you will see that the red spike happened at the longest candle that preceded this reversal. So it seems as if the red spike, when you notice the red spike, watch out for a move against. I don't know if you get my point. Based on what I can observe here, right? It seems as if when you get the red spike, you should be watching out for a move against the impulse move. You should be watching out for a corrective move. But when you get a yellow spike, you should be looking out at further movement in the direction of the trend. All right. So that is what I can observe right now. Okay. So when using this indicator, just pay attention to the volume spikes, both the red bars and the yellow bars, and also watch out for how price moves in relation to the volume spikes. Okay. All right. Now, basically, VSA allows you to spot accumulation or distribution phases in the market that are not visible with price action alone. Okay, so that's the reason you notice that's why some traders like to also add volumes to their analysis. Okay, because it gives you some additional information basically. Okay, it gives you some additional information. And one thing with volume spike is that a sudden increase in trading volume at certain price points could signal smart money entering or exiting the market. Okay, and then you should be looking for clues in the price action. Is price moving up with increasing volume? That's the reason why you see I had to take a little time to understand what these red spikes and yellow spikes were actually referring to, because you need to understand it for you to know what action to take. You really need to understand, because you need to look at price movement and know whether price is moving up with increasing volume or whether price is going down with increasing volume. So you should understand that. All right. Now let's just quickly talk about accumulation and distribution. Basically, accumulation is when smart money is quietly buying without causing a noticeable price change. Smart money could just be accumulating. That's why it's called accumulating, right? Smart money could be buying an asset probably around a particular zone, accumulating without noticeable price change. So at the end of the accumulation period, you might notice a significant move. All right. And then distribution is when smart money is quietly selling without causing a sharp drop in price. So by identifying these phases with volume analysis, you can anticipate the next move based on how price reacts. Okay, so now let's just quickly go through a simple step-by-step VSA strategy to predict the next candle. First of all, you should look for volume confirmation. Okay, understand what the volume is going about, what volume is saying, and how price is reacting to it. And then after that, wait for the next candle to confirm whether the trend will continue or reverse. Identify the trend. Okay, make sure that your trend is identified, and watch out for market structure. All right, and the way volume is reacting to that, and then watch out for price action at key levels. Okay, how price is reacting around resistance zones or around support zones. Look for volume spikes near these levels to identify whether the trend will continue or reverse. Okay, and then finally you trade based on confirmation. Once you spot a volume spike, all right, and the confirmation of price action, you can then place your trade with confidence. So use your stop losses to manage risk. For example, if you're entering a sell, maybe after this breakout is confirmed, we could possibly see a yellow spike, if I am not mistaken, if my analysis is correct. After this breakout has been confirmed, because we seem to have a breakout around here, if my analysis is correct, we might have a yellow spike after this breakout is confirmed. So in that case, you're going to be trying to trade in the direction of the trend, the newly formed trend. You're going to be trying to trade in the direction of the newly formed trend. Okay, then ensure you set your stop losses right. Okay, if you're entering a sell, for example, your stop loss can be some pips away from the resistance. Okay, to avoid stop hunts, do not make your pips very close. Okay, in case of liquidity grabs, just give some extra pips above, and then you can target notable key levels, right? You can target key levels for your take profit. Okay, you can target key levels for your take profit. Now the key is to always wait for confirmation. Do not just jump into trade based on one candle or volume spike alone. Always wait for the next candle to confirm your prediction. Okay, and there you have it, how to predict the next candle using VSA combined with powerful price action techniques. By understanding the relationship between price and volume, you can predict market moves with more accuracy and confidence. So if you found this course helpful, make sure to smash that like button and subscribe for more in-depth trading strategies. Have any questions or need further clarification on VSA, drop them in the comments below. I'd love to hear your thoughts and help you improve your trading. Thank you for watching, and I hope to see you in the next video. Happy trading.